Let's speak to Michael Tyndall, an auto specialist in Nomura International. He joins us live now. Thanks very much indeed for speaking to us. So what do these results tell us about BMW and indeed the company's performance in the second quarter?
Well, they're pretty impressive results. I mean, you might recall that BMW came to the market mid-July and upgraded its full-year forecast. At that point, consensus moved up quite considerably for the second quarter. And they've, as you said, smashed that completely. I mean, their margins have trebled from Q1 to Q2 in the autos division. So life looks pretty good for BMW, and I think that's, a function of what you were saying about the US, growth there from a very low base. China is obviously still very strong, and Europe is, I guess, a different story for the premium guys versus the volume guys. The volume manufacturers enjoyed scrapping incentives last year. The premium guys saw very little benefit from that. So this year they're growing from a low base in Europe. So good news for BMW
can
everywhere.
we expect then the same level of demand given the incentives are being wound down?
Well, we think that the level will ease somewhat as scrapping incentives basically fade away. But when you're talking about BMW, obviously they weren't a huge beneficiary, so the impact on them will be limited.
Sure. Now, tell me about the wider industry. Is BMW's result, is it a sign that the industry as a whole is perhaps returning to pre-crisis levels?
I mean, I think the way to look at the industry is it's very much a two-tiered industry. BMW sits within the premium segment. The premium segment has pricing power to a degree. It doesn't have the capacity issues that the volume segment has, and it's enjoying a steady recovery. So life, certainly in the premium segment, appears to be very good. I guess the icing on the cake is the strength of China. The volume side of things is completely different. They're facing scrapping payback, and they have excess capacity in Europe, and that's obviously a challenge for them.
Exactly, the sharp rebound in demand really being led by emerging markets, particularly China, as you say. So looking ahead, I mean, what proportion of the company's earnings will be generated from China in, say, a year or two from now?
It's a great question, unfortunately one that BMW and Daimler are not willing to give us the answer to. They don't split out the profits from their Chinese operations, but certainly it looks like China will be very soon their second top, if not their top market. And it's worth remembering that in China their mix is much stronger than it is elsewhere in the world. They sell more 7 Series than 5s, than 3s, and the cars tend to be fully loaded. So I think you'll see a very substantial portion of their profits coming from China going forward.
Michael Tyndall from Nomura International, thanks very much indeed for your time.
No problems. Thanks a lot.